What's up, my mind your money business folks? It's me yet again with another video on today's stock market. We still have another hour, 20 minutes to go before the stock market closes. And this is what it's saying. It says S&P 500 eyes fresh record. As Wall Street shrugs off President-elect Donald Trump's tariffs threat. They call it a threat. So let's get into the article. It says U.S. stocks on Tuesday mostly shrugged off President-elect Donald Trump's threat to impose fresh tariffs on China, Canada, and Mexico. The S&P 500 edged up roughly 0.4%, eyeing record close, while the tech-heavy NASDAQ composite jumped about 0.5%. The Dow Jones Industrial Average lagged, dipping from its latest record, as drug maker Amgen tumbled as much as 12% on weight loss data that failed to impress Wall Street. Health is wealth, people. Eat better, stay off medication if you can, but visit your doctor. Either way, it says markets were usually caught off guard by Trump's pledge late Monday to slap big tariffs on the U.S. biggest trading partners on his first day in office. His comments fired up trade war fears and dented Wall Street's hopes that Treasury Secretary nominee Scott Bessent, I hope I'm saying his name right, would rein in any extreme moves by the new administration. European car maker stocks fell on the heel of Trump's America First push. Nissan and Honda Motor, which have auto plants in Mexico, came under pressure. Its currencies, the Mexican pesos and the Canadian dollar, dropped sharply as the US dollar rallied. It's like I see what's going on, but I'm not sure if I'm understanding it correctly. Businesses were given incentives to take the jobs out of the U.S., away from the American people, for cheaper labor in certain places, say Mexico and even China. A lot of things are made in China. And so I guess the president is saying, okay, since you took your businesses out of the U.S. and they're being made in other places, then we're going to tax you heavily on it. I may understand, I may not, but that's how I see it. I do know of many jobs, at least from the South, that, a lot of these plant workers that no longer had a job back in the day, say 10, 15 years ago, 20 years ago, when companies moved and took their services, to other places. So maybe that's what's happening. You took your business out of the U.S., now you're going to pay heavily for it. Okay, outside of possible tariffs, investors also digest the release of minutes from the Federal Open Market Committee meeting that ended on November 7th, which showed officials prefer a gradual pace of interest rate cuts if the economy remains on solid footing. Because remember, the Federal Reserve is meeting again early next month, I believe, to talk about interest rates cuts. So will the rates get cut again in December, by 25 or 50 basis points? And if it does, what does that mean for the market? Because right now it's like at a standstill, right? The article also says participants anticipated that if the data came in about as expected, with inflation continuing to move down sustainably to 2% and the economy remaining near maximum employment, it would likely be appropriate to move gradually toward a more neutral stance of policy over time, the minute said. Makes sense. Yeah, it makes no sense to lower interest rates when people don't have jobs, because America's all about capitalism. It's about spending money. The more money you spend, the more the country, or those that are selling those products, make, right? Okay, so it says here some officials noted that a resurgence of inflation, which has remained sticky, along with a downturn in the labor market, could force the central bank to pause its easing cycle. That's true. Okay, the release sets the stage for October reading of the Personal Consumption Expenditure Index, the Fed preferred inflation gauge, on Wednesday. Interesting. So let's see what the market is doing right now. Nvidia. What is Nvidia doing? Not much. It's up 12 cents. It's interesting how it's hovering in this place, right? Maybe it's going to go down, because I will say I woke up a couple hours ago and it was up like maybe 90 something cents, and now it's up 8 cents, and the market is closing in like an hour 15 minutes. Apple, again, now the largest company by capitalization in the world, in the United States, is up almost 1% today. SMCI is down about 9%, a little over 9%. What's going on with SMCI? No particular reason. What about the S&P 500? Where are you, sir? Ma'am. My SPLG, S&P 500 ETF, is up 0.4% right now. Information Technology ETF is up 0.02% right now. Anytime there's green, I'll take it. Tesla is down 0.25% right now. Interesting. What is Amazon at? Amazon is up over 2%, almost over 2.5%. Meta is up over 7%. Meta is going for $572.15 currently. Wow. Microsoft is up over 8%, going for $427.12 at the present moment. Interesting. Very, 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 very interesting. Oh, what is Palantir at today? Palantir is up 0.44%. Nothing major. But yeah, that's what's going on in the stock market today, people. Yeah, it raises S&P 500, or the Dow has moved up a little bit, despite President-elect Donald Trump's tariffs threat. So yeah, that's it. So like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. Oh, also disclaimer, I'm not a financial advisor. Any and all content on this channel and in my videos are for entertainment purposes only and reflects my opinions. So please consult with a financial advisor before you invest any of your money into the stock market or any appreciating assets. Oh, also check out my video from yesterday where I talked about, you know, this one splurge that Americans have or partake in that's causing them to live paycheck to paycheck. Yeah. Lower your debt to income ratio, people. Get control of your money. Get control of your mind. That's why the name of the channel is Mind Your Money Business. You have to control your mind in order to get what you need out of life. And a lot of us do not have control. All right, so you guys take care. Have a great day. Peace.